All right, welcome to Zoe Forest Academy. This is Samuel Mapaye, the CEO of Zoe Academy. All right, today this is lesson 4. All right, and we'll be talking about technical analysis. All right, we have two types of analysis in forex trading. We have technical analysis and the fundamental analysis. All right, the technical analysis is what we combine with fundamental analysis in making decisions in the market. All right. Now, what is technical analysis? Technical analysis is the use of tools and indicators in knowing the direction of the market. All right. The use of tools and indicators in knowing the direction of the market. All right. Now, I have about 8 to 7 of them I'll be teaching you. But in this lesson 4, I will only be talking about trend lines and moving average. All right. What is trend lines? The best tools for a trending market is your trend lines. All right. That's the best tool for a trending market. Let me share my chart with you. Now look at this chart on USD All right, what is the market, the present market structure? The present market structure is that the market is trending up, right? The market is an uptrending, the bullish trend. All right, so you come to this spot, you can see that this is your trading, this is your trend lines. Click on it. Then you look for there's what we call they call this one shadow. All right. The last bullish candle, all right, then you draw it to the next bullish candle, it can be this. It can be this, right? As the next shadow, this and this, you can combine it together. All right, this is it. All right, so that means this is the first bullish candle, the one that has a tip, and this is the next to it, I guess. This can be the next to it actually, but I'll prefer this so that it can be a bit long. All right, so we have this. Now, what do we mean by this? Now, what I'm saying is this. Now, two things can happen here. All right. If a a bull candle or a bullish candle touch this trend line and moves up, just the way it has touched it now, all right, and moves up like this, we expect a buy. All right. So right now, I should look for a buy in this spot. All right. I should look for a buy and probably take my profit around this spot or around this spot, around this spot. All right. So that's what I'm going to do. So I should look for a buy. Why? If a bullish candle touch this trend line and moves up, there will be a buy. But if a bearish candle or a bear candle breaks this trend line and forms below this trend line, and forms below this trend line, right? Breaks this trend line and forms below, I should expect a sell. Right? There'll be a sell to around a support region. But we'll talk about that now. Lesson 5, where we talk about support and resistance, demand and supply zone. All right. So, like I was saying, all we just have to do is okay. How do we use our indicators, our trend lines to know the direction of the market? Once a bear candle touch this and up, this is an up trend line now. Once a bear candle touch this trend line and moves up, there will be a buy. That's a bullish candle, sorry. And once a bear candle breaks this trend line and forms below, there will be a sell. That's all. Watch out for a click out, please. If what broke this trend line is just a mere line like this, all right, this is a fake out. It must be a complete candle like this. You can see that. A full candle must be the one that must break this trend line. Or if it's just a tiny line like this, something like this, all right, like this, that broke this trend line, this is just a fake out, all right. So the market is not selling, the market wants to buy instead, all right. So something like this now, this is a fake out. So once this was the line that broke this trend line and formed below, all right, this is just a fake out, all right. So you don't fall for that trap. All right, so that's about my trend line. I hope that's clear, very simple. All right, I would love to draw something like this as well. All right, I don't know, I don't know why I would love to draw something like this. I would love to draw something like this. Maybe like something like this. Reason because I'm saying that it's possible for this breakout to happen. Now, this is another trend line, which I feel the market is following. All right, I call it our outer trend line. You can see that. All right, this is a touch this trend, but touch but all right, and form another trend line, start moving like that. This is another trend line which I'm saying. I call it my outer trend line. But what I'm saying is this: even though if there's going to be a breakout here, let me zoom it well. If there's going to be, you can see this is forming this path up here. All right. So if a parabench or a breakout happens here, I expect a sell from here to this spot. I'll come and take my profit around this region. All right. If there's a breakout at this spot, all right, then I can now look for a sell. I could look for I can continue a sell. But it's possible for the market, look at it. It's possible for the market to break this one, move to this spot, all right, and bounce back. You can see that and bounce back for a buy, all right. And if you bounce back, it's possible you break through. Once you break this inner trend line, then I continue my buy, all right. Or it can, touch this spot. Sorry, it can, sell to this spot and break out of this one. If you break out of this one, then I should expect a continuous sell. Do you see that? It's possible for this bear candle, that's your red candle or your bear candle, break this my trend line, all right, and sell till this spot. So I'll prefer take my profit around this spot, following this trend line. Every trending market follows a trend line. That's one thing you must know. Every trending market follows a trend line. So, all right, so it's possible to come and follow this, obey this trend line, right? Then bounce to this, sell to this spot, and continue buying. Or once there's a breakout at this spot, at this inner trend line, then I think that the market wants to continue to what? Continue to sell. Or it's possible for the market to sell to this point and bounce back and continue to work to buy. So I can quickly buy from this spot to this spot, and if there's a breakout at this inner trend line, then I can continue to work buy the buy this market. And I hope that's clear about trend lines. All right, this can happen as well. Let me show you another occurrence that can happen. Let me show you another one. And look at this. This is a downtrending market or a bearish market. All right. So how do I do my trend line? I can this is the last. The next to it is this. All right, I'm saying this as the next to it. This is it. Now, the bear candle touch the trend line, sold a bit, touch the trend line, sold a bit. Now it's touching my trend line now. I expect what is sell. All right. Now, of course, if now peradventure a good candle breaks this trend line and forms above, then I expect a buy. Can you see that? So once a bull candle breaks this trend line and forms, let me zoom it, and forms above, then there will be there will be buy. And all that is clear. There will definitely be a buy. All right. And of course, there will be a buy. But if like what we're having here, what if it just a bear candle touches trend line and moves downward, there will be a continuous sell. So right now, I should still look for a sell in this spot and sell. All right. Now, if there's a breakout here, then I have to draw another trend line at this spot. Now look at this. Now this also that the market obeyed this trend line, so you can see that it touched this one, it sold, touched this one, it sold. You can see that, all right. And okay, it's okay like this. It sold. Let me have this. Yeah. Okay, very good. Okay, very good. So this one is obeying this trend line. All right. So the market sold and has created another trend line and start moving like this. You can see that. All right, and start moving. So what I'm seeing here is this. Very simple. All right. So what I was seeing here is this. Very simple. All right. So which means that if there's a breakout at this spot and moves upward, all right, there's a breakout at this spot and moves upward and forms above, there will be a buy to this trend line. So it's possible for the market to buy to this trend line, all right, and bounce back, all right, for a sell. break out again and continue selling, or break out of this outer trend line, then we expect the what? We buy. This is what can happen. It's possible there's a breakout at this spot. All right, it's buy to this point. All right, then bounce back. All right, and continue what? And continue selling. And break out again and continue selling, or it's just break out of this outer what's called outer trend line and continue what? And continue a buy. You see that? All right. So, but if I'm going to enter for a buy at this region, I enter a buy around this spot, take my profit at the next trend line. All right. Maybe I'll enter my market around 1.17438. And I'll take my profit around this region. That is 1.1. I'll come to lower time frame to pick your entry. All right. So once you break out, 30 minutes, then enter my market around that is 1.17448. Then come to 1 hour to take my profits, then put around this next as 1.1651. Right, so that's how I'm going to take my profits and I'm gone. And of course, if you break out of this, all right, then I can enter the market and come to 30 minutes to pick my entry. If it's above it, all right, then take my come to 1 hour and take my profit at a resistance. Don't worry, I will go teach you about what I mean by resistance now. All right, so that's about my trade. I hope that is clear about trade lines. It's as clear, as simple as that. Let me show you another pattern of trade line which I'm going to take note of. All right, is this. And look at this. This market type buying, sold, bought, sold, bought. Let me draw it. Let me draw a trade line. Don't mind my trade line now. Let me draw a trade line. Okay, the market started buying at this point, sold to this point. Oh, sorry, let me clear this. Okay, started buying at this spot, sold to this spot, bounce back again. All right, sold to this spot, and started buying. All right, look at it now. Look at what happened now. Now the market started buying without following this trend line again. Now this is what happened. When the market started buying, all right, it didn't have to bounce back to this trend line. It's as if it's trying to create another what's called another trend line. What do? You draw another trend line from this spot where it started to where it is right now. You can see that. Let me make it clear. Okay, let me make it more clear. Now the market, this is my trend line. The market started buying here. It retraced, bought, retraced, bought, retraced, bought, and started buying again. You can see that. All right. Now, what do you observe here? The market obeyed this trend line to this spot, and this for what happened? It created another trending market for itself, for another trend line. So what do? I'll draw a trend line from that spot to this spot. I see that. So what am I saying? I'm saying that okay, the market is now obeying this inner trend line. So you can see it bounce back, goes aha. All right. Now this is going to be an inner trend line. All right. So if the market even break out of this trend line, maybe a bull, a bear breaks out of this trend line. All right, I can enter a sell around this region and take my profit at this outer trend line. All right, I get what I'm saying. Because it's possible for the market to get to this point and bounce back again. All right, and continue buying. Or once there's a breakout at this outer trend line, the market wants to what? Wants to continue selling. That's one another condition in trade lines. This is the second condition. This is a trend line now. The market bought, sold, bought, sold, bought, sold, and breakouts. All right, I started buying again. That's what happened now. All right, now there was a breakout here. After this breakout, there was a what? A quick sell. All right, but the market did not continue to sell. All right, it started buying again. What do? I will draw another trend line from where I started this my first trend line, then draw it like this. All right, can you see that? All right, once there's a breakout at this spot, I have to draw another trend line for this present trending market from this spot down like this. All right, so what happens is this: the market continue to buy at this spot, with this trend line. Once there's a breakout here, I expect a continuous what? A continuous buy, and once there's a breakout here, I expect a what? A continuous what? Sell. So it's possible for the market. So if I'm going to enter a buy here, I enter a buy from here, take my profit around here. If you want to sell, you can bounce back, sell again, bounce back within these two trend lines. If there's a breakout, if there's a breakout downward, there'll be a sell. If there's a breakout upward, there'll be what? A buy. Let me go to a real life chart. So let me go to a real life chart. All right. Now, let me come to, okay. Forex. Very good. Now, look at this. Initially, this was my trade line. Look at, let me show you something here. I want to use that as an example. But let me even use that. This was my trade line initially. This market was, this market was going this trade line. At some point, what happened? There was a breakout at this spot. Okay? There was a breakout at this spot, and the market started buying again. You can see that. So what do? I draw another trend line from this spot down to this spot. That same spot I picked the initial trend line. You can see that. All right. Now there's it. Now, what do you observe here? Let me show you. Let me zoom in. Now, this was my initial trend line. The market broke out of this trend line and did a quick sell, right? Now, after there was a breakout, what happens? It started buying again. So I have to draw that trend line, outer trend line for it. So that means the market bought from here to what? To the next trend line, all right, and sold down again. I see that. Now imagine it further breakout of this what is it called? My outer trend line. So my inner trend line, then I will expect a what? A buy, a continuous what? A continuous buy. But what happened? It bounced back again and what? And sold. Now, if I'm going to buy this market now, I was going to enter the market for a buy here. All right, then take my profit around this region. I will have been safe, right? Now, then I can also enter. Once I see that the market is coming, I can also enter for a sell here. Take my profit around this spot. I'm also right, right? Very good. Now, once there's a breakout at this outer trend line, what do you see? What's happening? Market is what? It's selling. Simple. That's simple as that. And of course, if the market gets to this point and start buying again, then I draw under what? Under trend line for it. As simple as that. Simple. And once there's a breakout at this point, I know the market really wants to what? Want to sell, and I continue what? Selling. And if it bounce up, I know the market wants to what? Wants to buy. Buy to where? To this my inner trend line. Buy to this spot, bounce back again, bounce to this. Either if there's a breakout at this spot, then you buy to this next trend line. And there's a breakout at this spot, you sell to this next trend line. If there's a breakout outside, then we'll continue what? You continue to sell. It's as simple as that. Oh, and I hope that is clear. All right, so that's about that, and I hope that is clear. But I sorry for the little break. I quickly did check my trade, what I was doing. All right, so that's about that, and I hope that is clear. And let me show you one again. Very good. Okay, let me use this as a good example for something I want to show you. All right. Okay, let me take away this. Now look at this was my initial trade line. Let me start from there. All right. It was the initial trade line. All right. With this, I showed you a breakout here. Or there's a breakout here, and I just drew it. Now let me show you another one here. This one is a break in, not a breakout, my break in. Now the market was following this trend line. All right. And at some point, what happens? Something happened. All right. Sorry, I want to quickly do something. Sorry, excuse me. Just a few minutes. Okay, sorry. Just a few minutes, please. All right. So, like I was saying, sorry for the break. All right, like I was saying, I said, so I was trying to show you this. Now, look at this. This is a trend line. All right. Now, what happens? The market broke in and started following another trend line. What do? I have to draw that trend line from this spot down to this spot. Start following this particular. Let me see. Let me start from here. Okay, consider. Following this trend line now, for example. So what happens if there's a breakout at this spot? There will be a sell to this spot, and if there's a breakout further, there will be a continuous sell. Or if it touch and bounce back up, there will be a buy. All right. So of course, and if it moves there can be what a sell to this spot, then bounce back. If there's a breakout, there are these two trend lines, and I hope that is clear about trend lines. And I hope that is a bit clear. All right. So that's about trend lines, and I hope that if you have any question, you can always forward it to the group. Will always be related to give a good reply, all right, to your question. All right, so that's about that. So now after we've done that, let me draw my trend line for this particular market now. All right, and I can start from here and pick it to this spot. Must touch the tip, please. Very, very important. Must touch the tip. Oh, very good. All right. So this is it. Now, so this is my first trend line. If I'm going to do analysis on this, this is my first trend line. So I look for what happens. If this candle line touched and moves up, I'm still expecting a buy in this market. All right. And if there's a breakout here, then I know I'm going to be what we said. Then I can bring in my moving average. What's moving average? Now, in technical analysis, once 2 to 3 indicators show you the same direction, all right, I suggest you move in that direction. Hopefully, I'm saying all right. So once 2 to 3 indicators show you a particular direction, all right, it is wise to move in that direction. All right, it's very, very important. Sorry, okay, very, very important to move in that direction. All right, so once I've checked with my trend lines, I'm seeing a buy. All right, and I can bring my moving average. We have two types of moving average. We have the simple moving average and exponential moving average. All right. I recommend my students to use simple moving average 8, simple moving average 21, and exponential moving average 55 for as a day trader. If you want to swing a trade, then you can now use your exponential moving average 100 and 200. All right. But if you want to just trade and make your profit per day, daily, all right, you can use your simple moving average 8, simple moving average 21, and exponential moving average 55. Where do you pick it from? All right, you come and pick it from here. You can see, I'm sorry, you come to this spot, you can see indicators, you come to oscillatory. Under oscillatory, you will see, you come to trend, another trend, you see moving average, then you click on it. All right, then you change this one back to 8. This is simple, you can use any color. All right, your choice. This is simple moving average. You come to this indicator again, you come to your trend, you see moving average, click on it, then you change this 8 to 21. All right, still it's going to be simple. You can now change the color so you need to identify it to work properly. All right, you click on it. Then you come to this same indicator, come to your trend, come to moving average, then you change this one to 55. By the time it's 55, you're going to use what exponential. So you convert this one to what exponential. All right, and you can use a different color to look at the identify it well properly. So we have what three moving average now. Our 8, our 21, our 8, and our 55. All right, what is moving average telling us? Very simple. Now, by the time I'm going to be now, once the three moving average is broken, if a bear now breaks the three moving average and forms to you, there will be a sell. But moving average now serves as something as a resistance that push the market downward. Now you can see that looking at say the bear has broken go to my 8 and 21 and wait for it to what to break what 55. So once it breaks 55 moving average and forms below, then I'm going to be sure that the market wants to what? Wants to sell. Consider that. As simple as that. But by the time it only break my what's called my trend line, I don't enter for a sell yet. Even if I'm going to enter a sell, I'll make sure I take my profit before it gets to 55. Why? But it can get to 55 and bounce back. I get what I'm saying. All right. So even though I'm going to enter a sell, after my trend line has showed me a sell, I will make sure I take my profit before it gets to 55 moving average. Or better still, wait for it to break my trend line, wait for it to break my moving average, then I can come down and will take my entry. I can take my entry around the spot. All right. Then I enter for a sell around the spot and I take my profits. Because if you see that if I join my outer trend line to share, I'm very sure it will definitely agree with my 55 moving average as well. Okay, you can see that almost equivalent to what the moving average. You can see that. So look at my outer trend line. Right. Equivalent to, so it must so it's confirmed even with my outer trend line as well. You can see that. So it's very important to sorry, I've taken my moving average. It's very important you use at least if after my trend line showed me an direction for itself, or I can still wait for my moving average to fight. And once you break the moving average, the market wants to work, wants to sell. All right, so that's one moving average. Now, of course, if it's a bull that broke the three moving average, you can see that the bull broke it, broke 21, broke 55, and what happens? There was a sell. The bear broke it, broke this one, broke this one. After you broke the three, what happened? There was what? There was a sell. Here there was a buy, here there was a sell. And so what happens here too? It broke my 18 moving average, broke my 21, broke my 55, and what do you see? Yeah. Now, once look at it, when it broke my what is it called? Look at it. Let me show you something. My 21, my 8, my 55. What happened? There was what? A test. And there's what we call this one retest. Retest means that the market is confirming a resistance here. Your stick has broke through, so you should expect a buy. So this is just a retest. After this retest, once it has broken my three moving average, I know that there will be a buy. If it's a bull candle now, there will be a buy. But there can be a retest that there's a resistance here, but I broke through. We are still going to continue the buy. Let me show you something happen here. Now look at it. The red candle broke what? Broke 8, broke 21, and it didn't break 55. And because it did not break 55, what happened? It bounced back. Consider it bounced back. The same thing happened here. It broke 8. It's almost ahead. Get to 21 and what? And bounce back. You can see that. Here it has broken 8. It has broken 21. Not yet. We're not broken 55. So I'm not expecting it to sell until it breaks this 55. Once it breaks 55, I'm sure that the market really wants to what? Wants to sell. They expect a good sell. So that's number one. Number two, you need to take note of is this. Where the moving average meets too also indicates something powerful. Right, let me think them here. Moving average 21, simple. Moving average 8. Simple as well. Let me show you something quickly. I hope I'll be able to show you this average we are having here. So the market is on, it keeps moving the chart backward. That's the issue we're having presently. Let me see if I can update myself there. So, let me show you what I'm trying to show you on the chart. Alright? Let me tell you something. Now this is the moving average now. This is moving average 8. This is moving average probably 1, and this is exponential moving average 55. Now, wherever the three moving average meets, that's points where they meet. Once a candle breaks it down, breaks through, and forms below, like that's going to be a bear candle now, breaks through and forms below, there will be a massive sell. Alright, and if it was a bull candle that breaks through that point where the three moving average is always a rare case anyway. Where the three moving average meets, that point where they collide together. Imagine this is 8, this is 21, maybe 55. Now cross through these spots. Alright, and the candle now breaks that spot up and forms above. It will be a massive what? A massive buy. And all that is clear about your moving average. Like I said, it's very simple. Once a moving average is broken, that means maybe a bull candle break a moving average upward, there'll be what? A buy. And once a bear candle breaks three moving average and falls below, there'll be what? Sell. It's as simple as that. And I hope that's clear. So if you have any question, you can always send it to the group, and definitely people will be here to give a reply, or probably send the message, the question to your coach, and they will definitely be there to give a reply. So that's all about my trend lines and my moving average. Please don't forget, trend line you could best choose to trade trending markets. And very simple, just connect your the first two shadows. That thin line, just connect together. The last one and the next to it, that's all. All right. Once there's a breakout, there's a BNB sell. That's if the trend line is downward. If the trend line is downward, all right. Once there's a breakout, there'll be a buy. And if the trend line is upward, once there's a breakout, there'll be a what? A sell. As simple as that. All right. So and if you touch and moves down, there'll be a sell. And if you touch and moves up, there'll be a buy. Simple. So it's as simple as that. All right. And of course, watch out for breakouts. If it's just a thin line that broke through your trend line, that is just the what? A fake out. If the candle must form, the candle must break the trend line, must be a formed candle, a complete one. And I showed an example of it, something like this. Yeah, something like this. Something like this, as far as big as my hand must be to be not a thin line like this. So it's as simple as that. So if you have any question, of course, you can want to, you want to ask me, what about if you just break my 8 and 21? Should I enter the market? No. Let's break the 3 moving average. Even though you're going to enter the market, make sure you take your profit before the next moving average, like before your 55 moving average. All right. So that's how do I come about my moving average? Is my experience. I go to my experience. That has been the best moving average that has been working for me. Moving average 8, moving average 21, and exponential moving average 55. All right. So in our lesson 5, we talk about technical analysis 2. This technical analysis 1. For our lesson 5, we talk about technical analysis 2, where we talk about support and resistance, demand and supply zone, Fibonacci retracement. All right. So after you are done with this, what I expect you to do now is this is your assignment. All right. You're going to open a pair, identify the market structure. If it is a trading market, draw a trend line. All right. Show it to your coach. Or you can snap it and send it to the group and let us see it. Let us adjust or probably do any correction, or if you are correct, let us tell you, and if you are wrong, let us correct you. All right. So you must know how to draw your trend line. In fact, when I was doing my training, I learned how to draw trend line for about a whole month. I was busy drawing trend line for a whole good month, like consistently. All right. So you open a pair. Once the market is trending, or draw a trend line, combine with your moving average. All right. In fact, with that, you can even make a decision in the market. Right now, with your trend lines and moving average, you can tell what the market wants to do. Or either the market wants to buy or the market wants to sell. Even right now, or you can tell. All right. So even right now, you can tell if the market wants to buy or the market wants to sell. Even with what I've just taught you. All right. I think we just learned in this lesson. Or just combine your trend line and your moving average. In fact, that's my best tool. My best tool is trend lines and moving average. I must tell you the truth. That's my best tool. Once you can combine it, you should be able to tell the direction of the market. All right. So if you don't understand, watch the video again. Make sure you understand before you move down to the next lesson. All right. Thank you very much, and you have a lovely day. So the assignment now is that you will draw trend line. All right. Draw trend line consistently. Let us see it on the group. You can ask us to, are you correct, are you wrong, are you getting it, and all of that. And if also your moving average, know how to bring the moving average from simple moving average 5, so exponential moving average 5, simple moving average 8 and 21. Know how to use both your system and your phone, mobile phones. I think in lesson 2, you learned how to use your mobile phones to what is it called? Use your tools, with the use of your indicators and tools. So thank you very much. You have a lovely day.